Good day everyone. So my report is all about receivable financing. So the objectives of my report is first to identify the sources of financing through receivables, to know the accounting for pledge of accounts receivable, to know the accounting for assignment of accounts receivable, to understand factoring of accounts receivable, to know the classification and presentation of pledge, assigned, and factored accounts receivable, to know the concept of discounting of notes receivable, to distinguish discounting of note receivable with recourse and without recourse, to understand the discounting of note receivable accounting for as conditional sale with recognition of contingent liability, and lastly, to understand discounting of note receivable accounted for as secured borrowing. So receivable financing is the financial flexibility or capacity of an entity to raise money out of its receivables. So, yung receivable financing, pag yung cash ng company ay hindi na sapat dahil yung sales nila ay bumababa and may mga liabilities sila na dapat bayaran, at dahil hindi sapat yung cash nila para pambayad doon sa liabilities nila, doon na papasok si receivable financing. So, mapipilitan yung company na yung receivables nila yung ipambayad doon sa liabilities nila. So, forms of receivable financing. So, A. Pledge of accounts receivable. B. Assignment of accounts receivable. And C. Factoring of accounts receivable. D. Discounting of notes receivable. So first, pledge of accounts receivable. When loans are obtained from the bank or any lending institution, the accounts receivable may be pledged as collateral security for the payment of the loan. So, dito, pinipledge ni borrower or ni company yung receivables niya na pang-collateral doon sa loan niya. Halimbawa nito, nang mangungutang si company kay bank and yung bank, di papautangin yung company if wala kang pang-collateral. So, dahil meron namang accounts receivable si company o yung borrower, yun yung pledge niya na pang-collateral. So, dito, receivables in general yung ginagamit pang collateral. The loan is recorded by debiting cash and discount on note payable if loan is discounted, and crediting note payable, and the subsequent payment of the loan is recorded by debiting note payable and crediting cash. So, illustration. On November 1, 2019, an entity borrowed 1 million from Philippine National Bank and issued a promissory note for the same year. The term of the loan is 1 year and discounted at 12%. The entity pledged accounts receivable of 2 million pesos to secure the loan. So, on November 1, 2019, the journal entry to record the loan is debit cash na 880,000 and debit discount on note payable na 120,000. And credit note payable bank na 1 million. So, yung cash is, yung discount on note payable is galing doon sa 12% ng 1 million. And 120 less 1 million is 880,000. So, if the loan is discounted in the banking parlance, this means that the interest for the term of the loan is deducted in advance. So, dahil discounted siya, so yung bank, gideduct yan na daan yung interest. So, the face value of the loan is 1 million and interest deducted in advance na 1 million times 12%, which is 120,000. So, i-less ko siya and yung net proceeds is 880,000. So, statement of presentation. On December 31, 2019, using the straight line method of the discount on note payable is amortized as interest expense for 2 months from November 1 to December 31. So, debit interest expense na 120 times 2 over 12 is equals to 20,000 and credit discount on note payable at 20,000. At this point, if a statement of financial position is prepared on December 31, 2019, the note payable bank and the discount on note payable are presented as follows. So, yung current liabilities niya na note payables sa bank na 1 million and less the discounted o note payable na 100,000 and yung carrying amount is 900,000 pesos. So, naging 100 na lang siya kasi na-amortize na yung 20,000 from November 1 to December 31. So, kaya 100,000 na lang siya and yung carrying amount is 900,000. A note to financial statement may appear as follows. The note payable to bank matures on November 1, 2020 and is secured by accounts receivable with face value of 2 million pesos on November 1, 2020. The payment of the bank loan is recorded. Debit note payable bank na 1 million and credit cash na 1 million. And the discount on note payable is finally amortized. So, debit interest expense na 100,000 and discount on note payable na 100,000. So, next is the assignment of accounts receivable. So, assignment of accounts receivable means that a borrower called the assigner transfers rights in some accounts receivable to a lender called the assignee in consideration for a loan. More formal type of pledging of accounts receivable, assignment is secured borrowing evidence by financing agreement and promissory note, both of which the assigner signs. Assignment may be done either on a non-notification or notification basis. So, dito, merong gina-assign si borrower or si assigner na specific accounts receivable para pangbayad or collateral doon sa loan niya sa bank or si assignee. Magkaparehas sila ng pledging na pambayad or collateral sa loan, pero ang pinagkaiba nila is receivable in general yung sa pledging and dito naman sa assignment is specific accounts receivable yung pang-collateral. So, non-notification basis, if hindi notified or hindi alam ni receivable na gi-assign ni company yung accounts niya doon sa bank. So, doon pa rin siya magbabayad kay company and si company na yung mag-remit doon sa bank pag na-collect niya na. So, notification basis naman, if pag notified si receivable at dahil notified siya, so doon siya magbabayad sa bank and si bank na yung magkokolekta. So, illustration. Sa illustration ng non-notification basis. On April 1, an entity assigned 700,000 pesos of accounts receivable to a bank under a non-notification arrangement. The bank advances 80% less a service charge of 5,000. So, the entity signed a promissory note that provides for interest of 1% per month on the unpaid loan balance. To separate the assigned accounts receivable assigned na 700, debit accounts receivable assigned na 700,000 and credit accounts receivable na 700,000. To record the loan, debit cash na 560,000 from 700,000 times 80%, so 560,000 less na 5,000 na service charge. So, yung cash niya is 555,000 and debit service charge na 5,000 and the credit note payable bank na 560,000. On April 5, issued a credit memo for sales return to a customer whose accounts was assigned 20,000 pesos. So, debit sales return na 20,000 and credit accounts receivable assigned na 20,000 pesos. On April 10, collected 300,000 of the assigned accounts less 2% discount. So, debit cash na 294,000 and debit sales discount na 2% times 300,000 is 6,000 and credit accounts receivable assigned na 300,000. So, on April 30, remitted the total collection of the bank plus interest for 1 month. So, note payable na 294,000 and interest expense na 1,000 times 560,000 is equals to 5,600 and credit cash na 299,600. So, on May 7, assigned accounts of 15,000 proved worthless. So, debit allowance for doubtful accounts na 15,000 and accounts receivable assigned na 15,000. So, on May 20, collected 300,000 pesos of the assigned accounts. So, debit cash na 300,000 and accounts receivable assigned na 300,000. On May 30, remitted the total amount due the bank to pay off the loan balance plus interest for 1 month. Note payable bank na 560 less 294,000. So, yung remainder ng kanyang loan, note payable is 266,000 and debit interest expense na 1,000 times 1% times 266,000. So, 2,660 and credit cash na 268,666. To transfer the remaining balance of assigned accounts to accounts receivable, debit accounts receivable na 65,000 and credit accounts receivable assigned na 65,000. So, total accounts receivable assigned na 700,000 less the collection which is the 294,000 from April 10 and plus the 300,000 from May 20 is equals to 594, sales discount na 6,000 and sales return na 20,000 and worthless accounts na 15,000 for the total of 635,000 less the 700,000 which is the balance of 65,000. So, illustration of notification basis. On July 1, an entity. So, dito pala sa notification basis, notified si receivable na nag-i-assign yung account niya and doon siya direct nagbabayad kay bank. On July 1, an entity assigned 1 million of accounts receivable to a bank under a notification arrangement. The bank loans 80% less 4% service charge on the gross amount assigned. The entity signed a promissory note that provides for 1% interest per month on the unpaid loan balance. On July 1, debit accounts receivable assigned na 1 million and credit accounts receivable na 1 million and debit cash na 800,000 from 80% ng 1 million less the 4% ng 1 million na service charge is equals to 760,000 and debit service charge na 4% ng 1 million na 40,000 and credit note payable bank na 800,000. So, on July 31, received notice from bank that 600,000 of the assigned accounts were collected, less 2% discount. A check was sent to the bank for the interest due. Debit note payable bank na 588,000 and debit sales discount na 2% times 600,000 na 12% and accounts receivable assigned na 600,000. So, debit interest expense na 1% of 800,000 is 8,000 and credit cash na 8,000. On August 31, received notice from bank that 300,000 of the assigned accounts were collected. Final settlement was made by the bank for the excess collection together with the uncollected assigned accounts of 100,000. So, debit cash na 85,880 and interest expense na 2,120 and note payable na sa bank na 212,000 pesos and credit accounts receivable assigned na 300,000 pesos and debit accounts receivable na 100,000 and credit accounts receivable assigned na 100,000. So, yung computation, loan from bank na 800,000 less July collection by bank na total of 588,000. So, yung balance due the bank is 212,000. August collection by bank is 300,000 and less the loan balance na 212,000 and the total of excess collection na 88,000 less interest expense, which is 1% times 212,000 na 2,000. So, 2,112 and yung remittance from bank is 85,880. So, yung statement of presentation is an entity provided the following accounts at year end. Accounts receivable unassigned na 4 million, and accounts receivable na assigned na 1 million and allowance for doubtful accounts na 100,000 and note payable bank related to assignment na 400,000 and accounts receivable unassigned 4 million plus accounts receivable assigned na 1 million, total of 5 million. And allowance for doubtful accounts na 100,000 less sa 5 million, and the net realizable value of accounts receivable nila is 4,900,000. The net realizable value of 4,900,000 is included in the caption trade and other receivables. So yung trade and other receivables are ito yung mga receivables na related sa kanilang usual na daily yung usual na operation ng kanilang sales or trade. So, equity in assigned accounts. Moreover, the entity shall disclose its equity in the assigned accounts determined as follows. Yung accounts receivable assigned na 1 million and less the note payable bank na 400,000 and equity in assigned accounts is 600,000. So, next, ang factoring. Factoring is a sale of accounts receivable on a without recourse or and notification basis. An entity sells accounts receivable to a bank or finance entity called a factor. Dito sa factoring, binibenta na dito ni company yung accounts receivable niya sa bank or tinatawag na factor. Tinatransfer na dito ni company yung ownership ng receivable sa bank, unlike sa pledging and assignment na sa company pa rin yung ownership. So, without recourse, it means wala nang liability si company doon sa factored accounts receivable sa kay factor. So, hindi liable dito si company if hindi na na-collect ni factor yung notes ni receivables or ni factored account. So, notification basis siya dahil notified dito si receivable na de-factor yung accounts niya. So, factoring may take the form of the following: casual factoring and factoring as continuing agreement. Casual factoring, if an entity finds itself in a critical cash position, it may be forced to factor some of all of its accounts receivable at a substantial discount to a bank or finance entity to obtain the much-needed cash. So, factoring is a continuing agreement. Factoring may involve a continuing arrangement where a finance entity purchases all of the accounts receivable of a certain entity. So, illustration. An entity factored accounts receivable of 500,000 with credit terms 2/10 and N/30 immediately after shipment of the goods to the customer. The factor charged a 5% commission based on the gross amount of the receivables factored. In addition, the factor withheld 20% of the amount of the receivables factored to cover sales return and allowances. The journal entry to record of factoring: debit cash na 365,000 and sales discount na 10,000 and commission na 25,000 and receivables from factor na 100,000 and credit receivables, accounts receivables na 500,000. So, yung computation is yung gross amount na 500,000 less sales discount na 2% ng times 500,000 na so 10,000 and yung commission na 5% sa times 500,000 is 25,000 and factor sold back na 20% times 500,000 which is 100,000, the total of 135 less the 500,000 gross amount. So, yung cash received from factoring is 365,000. If the customer is subsequently allowed a credit of 50,000 for damaged merchandise, the journal entry is debit sales return and allowance na 50,000 and debit credit sales discount na 2% times 50,000 which is 1,000 and receivable from factor na 49,000. When all the receivables factored are collected by the factor within for the returns and allowances, the final settlement with the factor is recorded as follows. So, debit cash na 100,000 less 49,000 is equals to 51,000 yung cash and credit receivable from factor na 51,000. So, yung credit card is a plastic card which enables the holder to obtain credit up to a predetermined limit from the issuer of the card, the purchase of the goods and services. So, the credit card has enabled retailers and other businesses to continue to sell goods and services where the customers obtain possession of the goods immediately but do not have to pay for the goods for about 1 month. So, the major credit cards in the Philippines are Diners Club, American Express, Visa, and MasterCard. These entities are generally responsible for approving the credit of customers and collecting the receivables for a service fee from 1% to 5% of the credit card sales. Generally, if a customer buys goods and uses a credit card, the credit card receipt must be forwarded by the retailer to the card issuer, who will then pay the retailer an appropriate amount minus the credit service charge. So, 2 entries are necessary. One entry at the time of the sale and another entry when payment is received from the card issuer. So, illustration, credit card sales to customers using Diners Club amount to 200,000 pesos for certain period, and the credit card receipt are forwarded to Diners Club and payment is subsequently received from Diners Club minus a 3% service charge. To record the credit card sales, debit accounts receivable Diners Club na 200,000 and credit sales na 200,000. And to record the payment of Diners Club, debit cash na 194,000 and debit credit card service charge na 200,000 times 3%, which is 6,000, and credit accounts receivable Diners Club na 200,000. So next is concept of discounting. So as a form of receivable financing, discounting specifically pertains to note receivable. So, in a promissory note, the original parties are the maker and payee. When a note is negotiable, the payee may obtain cash before maturity date by discounting the note at a bank or other financing company. To discount the note, the payee must endorse it. Thus, legally, the payee becomes an endorser and the bank becomes endorsee. Yung note receivable are claims supported by formal promises to pay, usually in the form of notes. Si maker yung gumawa ng note and liable, and yung payee siya yung entitled sa payment on the date of maturity. So, discounting siya kasi yung maturity value sana na makuha ni payee kay maker is may discount na kasi ganito. Halimbawa, si maker or customer ay liable to pay kay payee hanggang sa maturity value ng note. Kaso, si payee hindi na makapaghintay and need niya na ng cash, kaya binenta niya na o in-endorse niya sa bank yung note ni maker. So, si bank ay called endorsee. So, pag na-accept ni bank yung i-endorse ni payee or ni endorser, so yung maturity value na dapat makuha ni endorser kay maker is madi-discount na ni bank. So, Endorsement is the transfer of right to a negotiable instrument by simply signing at the back of the instrument. Endorsement may be with recourse, which means that the endorser shall pay the endorsee if the maker dishonors the note. In the legal parlance, this is the secondary liability of the endorser. In the accounting parlance, this is the contingent liability of the endorser. Endorsement may be without recourse, which means that the endorser avoids future liability even if the maker refuses to pay the endorsee on the date of maturity. So, in the absence of any evidence to the contrary, endorsement is assumed to be with recourse. So, with recourse siya, so it means liable si endorser kay endorsee pag hindi nakapagbayad ng note niya si maker. So, contingent liability is a liability depending on the outcome of the future uncertain event. So, the terms related to discounting of note. So, number 1, net proceeds refers to the discounted value of the note received by the endorser from the endorsee. So, formula, net proceeds is equals to maturity value minus discount. So, yung net proceeds, yan yung kabuuang halaga ng pera na makukuha mo. And number 2, maturity value is the amount due on note at the date of maturity. So, yung formula is principal plus interest is equals to maturity value. So, yan yung amount ng pera pagdating ng maturity date. So, yung maturity date is the date on which the note should be paid. Yan yung araw na magmamature na yung note or yung due date. Number 4, principal is the amount appearing on the face of the note. It is also referred to as face value. So, yan yung pera or yan yung original amount. Yung wala pang interest or mas tinatawag na face value. And number 5, interest is the amount of interest for the full term of the note. Principal, so yung formula is principal times rate times time. Number 6, interest rate is the rate appearing on the face of the note. Number 7, time is the period within which interest shall accrue. For discounting purposes, it is the period from date of the note to maturity date. So, yung time, in other words, the term time is the entire period of full term of the note. Number 8, discount is the amount of interest deducted by the bank in advance. Discount is equally a maturity value times discount rate times discount period. So, number 9, discount rate is the rate used by the bank in computing the discount. The discount rate should not be confused with the interest rate. The discount rate and interest rate are different from each other. If no discount rate is given, the interest rate is safely assumed as the discount rate. So, number 10, discount period is the period of the time from date of the discounting to maturity date. Simply compute the discount period equals term of the note minus the expired portion up to the date of discounting. The discount period is the unexpired term of the note or the remaining term of the note on the date of discounting. So, yung illustration ng discounting with recourse. So, a 1 million pesos 180-day 12% note dated July 1 was received from a customer and discounted without recourse on August 30 at 15% discount rate. So, yung computation, maturity value which is equal to the principal plus interest, principal na 1 million and interest na 1 million times 12% and yung 180 over 360. So, yung 180 over 360, yan yung time, and yung 12%, yan yung rate, and yung 1 million, yan yung principal. So, yung interest is 60,000. So, yung maturity value ng 1 million is total to 1,060,000. Observe that the interest must be for the full term of the note in determining the maturity value. Discount, which is equal to the maturity value times discount rate times discount period. So, discount na. So, 1,060,000 times 15% times 120 over 360 is equals to 53,000. The discount period is the remaining term of the note on the date of discounting. Term of the note is 180 days less days expired from July 1 to August 30. So, yung 60 days, yan na yung nag-expired na term. And yung discount period remaining term is 120 days. In counting, exclude the first day but include the last day. So, net proceeds from discounting. So, maturity value na 1,060,000 and less the discount na 53,000 and net proceeds na 1,007,000. So, yung carrying amount on notes payable is principal na 1 million and accrued interest receivable 1 million times 12% times 60 over 360. Yan yung expired portion. So, 20,000 and the carrying amount of note receivable is 120,000. So, the accrued interest receivable is interest earned from July 1 to the date of discounting on August 30 or 60 days. So, the gain or loss on note discounting, net proceeds na 1,007,000 and carrying amount of note receivable na 1,020,000 and yung loss on note discounting is 13,000. The difference between the net proceeds from discounting and the carrying amount of the note receivable is recognized as gain or loss. So accounting for note receivable discounting. The accounting for note receivable discounting depends on whether the discounting is with or without recourse. In the illustration, the discounting is without recourse. Therefore, there is no contingent liability. So the journal entry, debit cash na 1,007,000 and credit debit loss and note receivable discounting na 13,000 and credit note receivable na 1 million and interest income na 20,000. The note receivable account is credited directly because the sale of the note receivable is without recourse or absolute. The interest income is credited for the actual interest earned on the date of discounting. So, illustration ng discounting with recourse. So, a 2,400,000 6 months, 12% note dated February 1 is received from a customer by an entity and discounted by First Bank on March 1 at 15%. So, the principal na 2,400,000 and interest na 2 million. So, yung 2,400,000 times 12% na discount, na interest times 6/12 is equals to 144,000 and yung maturity value is 2,544,000 and less the discount na from 2,544,000 times 15% times 5/12, which is 159,000, and yung net proceeds is 2,385,000. Term of the note is 6 months and less the age of note from February 1 to March 1, which is 1 month, and discount period na 5 months. So, since the term of the note is expressed in months, the counting is by months regardless of the number of days in a month. So, principal, 2,400,000 and accrued interest receivable, 2,400,000 times 12% times 1/12 na 24,000 and carrying amount of note receivable is 2,424,000. The accrued interest receivable is for 1 month from February 1 to the date of discounting on March 1. Net proceeds is 2,385,000. Carrying amount of note receivable na 2,424,000 and loss on note receivable discounting is 39,000. If the discounting is with recourse, the transaction is accounted for as either of the following: conditional sale of note receivable recognizing a contingent liability, or secured borrowing. So, conditional sale, if the discounting is treated as a conditional sale of note receivable, the journal entry to record the transaction on March 1 is as follows. So, debit cash na 2,385,000 and debit loss and note receivable discounting na 39,000 and credit note receivable discounted na 2,400,000 and interest income na 24,000, and the note receivable discounted account is deducted from the total notes receivable when preparing the statement of financial position with disclosure of the contingent liability. So, note is paid by maker on maturity. On August 1, date of maturity, the note is paid by the maker to the First Bank. The contingent liability is extinguished as follows. Note receivable discounted na 2,400,000 debit and credit note receivable na 2,400,000. Note is dishonored by maker. The note is dishonored by maker on August 1 and the entity pays the First Bank the maturity value of the note na 2,544,000 plus protest fee and other bank charges of 6,000. The total payment of charge to accounts receivable, the journal entries: 1. To record the payment to First Bank na accounts receivable debit na 2,550,000 and cash na 2,550,000. credit cash na 2,750,000. And number 2, to cancel the contingent liability, debit note receivable discounted na 2,400,000 and credit note receivable na 2,400,000. So, secured borrowing, if the discounting is treated as a secured borrowing, the note receivable is not derecognized, but instead an accounting liability is recorded as at an amount equal to the face amount of the note receivable discounted. So the journal entry is debit cash na 2,385,000 and interest expense na 39,000 and liability for note receivable discounted na 2,400,000 and credit interest income na 24,000. There is no objection if the interest expense is netted against the interest income or a net interest expense of 15,000 because the discounting transaction is a borrowing. There is no gain or loss on discounting if the note receivable discounting is accounted for as secured borrowing. Note is paid by maker on maturity. If the note is paid by the maker to the first bank, the liability for note receivable discounted and note receivable are derecognized. So, pag gina-derecognize is parang gina-cancel yung accounts niya. So, debit liability or note receivable discounted na 2,400,000 and note receivable na 2,400,000. So, note is dishonored by maker. The note is dishonored by maker on August 1 and the entity pays the first bank the maturity value of the note 2,744 plus protest fee and other bank charges of 6,000. So, the journal entries to record the payment to first bank, debit, accounts receivable na 2,750,000 and credit cash na 2,750,000. To recognize the liability for note receivable discounted and note receivable, debit liability for note receivable discounted na 2,400,000 and note receivable na 2,400,000. So, yun lang po.